All right, today is Tuesday, December 13th, and it's a couple of minutes before the market's closing. And we're going to make some buys into the $1 million portfolio. So the portfolio is up almost 1% today. It was up a lot more than that when the market first opened because the inflation news was just really good. But I think people took that as a sign to take some profit off the table, so they did, and things have gone back down again. But we have about $60,000 in cash to invest, so let's get on with buying into this portfolio. So first up is the NASDAQ 100 QQQ, and we're going to add 123 shares to it. It's about 35,500. So let's go ahead and review this order. All right, that order is placed. Next up is our long-term treasuries, which is represented by the fund TLT, or I should say the ETF. We're going to buy 150 shares of that. Market price, that's about 16,100. I'll go ahead and review the order. All right, and TLT is done. Last but not least, we're going to buy some REIT, which is represented by Realty Income Corp, symbol O. And we're going to buy 129 shares of that, also at market price. That's about $8,400. We'll review that order and get that placed as well. All right, we've made our buys, and now looking back at the portfolio after refreshing it, we have about $600 in cash, but all the positions have jumped up accordingly. And everything looks good. So that completes the buys for today. We'll see what the future brings, but there's expectation that the Feds will raise rates by 50 basis points, 0.5% tomorrow. And depending on the stance they're going to take after they announce the rate hike, the market could go crazy again. But I have a plan, so I'm going to keep carrying on with it. But before I sign off, I'd just like to go over the portfolio performance for year to date. This is through yesterday. So the portfolio is down 9% for the year, 9.1%, compared to 15% for the S&P 500. So I'm going to take it. This is going to change a lot more as I take more cash from the cash position in this portfolio and make my buy-ins. One of my viewers actually commented, why are you comparing it to the S&P 500 when this is really something like, a 50% stock, 25% bond, and then the rest is other. The reason for that is that it's a standard benchmark because if I was not in this allocation, I would be in some form of S&P 500 fund and then, maybe have a little bit of bond there. So it's a comparison point because everybody else compares their performance to the broad market. And if we don't do that, we really don't have a reference point to test different allocation strategies and whatnot. But it's a fair point. I'm actually very happy with how the end of this year is now shaping up to be. So knock on wood, I hope it continues into the next year. I'll talk to you at the end of the month for the broad portfolio update. But until then, enjoy and have a Merry Christmas. Later.